guys, welcome to today's lesson. Today's lesson we're going to be looking at confirmation areas. So if you're struggling with confirmation, and why should you wait for a reaction? So today I'm just going to be talking or going through the charts based on why should we be waiting for a reaction before taking an entry. So guys, let's go to the chart. So as we look at the chart, we're looking at a daily time frame at the moment. So if we go on a daily time frame, we analyze based on higher time frames. We go to higher time frames, and our execution, we take execution based on lower time frames. So as we can see here, we do see that the market was giving us a downtrend right here. So if you want to know what to do when the market is moving like it's going in a downtrend and you're not sure whether you should take an entry or not, I'm just going to show you simple entry confirmations. So this is a daily time frame. Remember that, guys, we only analyze on a higher time frame to see the market direction. We never execute on a daily time frame, and reason being is because on small time frames like 15-minute time frame, 5-minute time frame, we do get those minor resistance and support levels. So as we see now, we do have a direction. We do see that gold here, we do see that the market is going up. We do have a bullish market, but if you go on the left hand side, you definitely see there's something that corresponds to the right hand side. So I'm just gonna mark my areas so that you can see what I'm talking about. If I'm marking this area right here, I'm just gonna show you a level that we can look into. So you see here on the left hand side, there is a resistance here. So when you see a resistance level like that, you just mark it so that you can see how the market reacts. Remember that we spoke about, I mentioned reaction. So all you have to do before taking an entry is wait for a reaction. See how the market reacts at that very same level. So let's look here. When we look at this part on the right hand side, we see something similar. We see that the market is reacting, but it broke above, but it's reacting above that rejection. It is reacting above the rejection. So it's no longer reacting below, but it's reacting above. So when it's reacting above like that, it could be a possible indication that there are buying opportunities above the previous resistance. So we go to a 1 hour time frame. Let's go to a 1 hour time frame. And the 1 hour time frame will tell us exactly how many times has the market touched that very same level. So here we see that there are multiple reactions from our 1 hour time frame. That shows that, okay, I can be looking for buying opportunities since, well, the market is failing to close below. So the only time we'd be looking for selling opportunities is if the market goes back below this support area. So let's look above the support area. So if you're looking above the support area, now we know that we're going to be having to take an entry. But before taking an entry here, you have to check what happens with your small time frame. So let's go to 15-minute time frame. Let's analyze from a 15-minute time frame. So these are the confirmations that you wait for. Whenever you see the market closing above like this, it can be an indication that we are looking for buying opportunities. So when the candles close above support like this is where you take your long position, and we target the next resistance level. So let's say now we go in long. After going in long, we do mark our stop loss. So in this case, the stop loss most probably would be at 4,590. Why am I putting a stop loss at 4,590? We want to have a stop loss that won't take extreme percentage on your entry or in your balance. So your stop loss shouldn't be wider than your target. So you shouldn't be holding a stop loss very far. Some people put stop losses that are very far. You could find that the person is putting a stop loss right there below. So you get that it takes a substantial amount of your capital. Even if you were to recover, it would take you a long period. So if you mark your level like this, you already know that, okay, the market closed above support and my next target of exit, it should be around there. Why am I having that target? Is because I'm looking at the reaction. I'm looking at the previous reaction. If you check here, you see how the market reacted there. Even here on the left hand side, you do see that we did get a reaction there. So if the market is closing above like this, guys, I would advise you wait for a 5-minute or 15-minute candle to close above like this. When the market has not yet closed above, if the candles were approaching this support level and you haven't received a reaction here or seen a reaction, do not take an entry. So waiting for a reaction is very important. Waiting for a reaction is very important. If you check here how the market dropped at this resistance, immediately when this candle closed on a small time frame, remember that when you analyze from a 4-hour, you won't see this candle. You're just going to see a long 4-hour candle. But if you go to a 5-minute, 15-minute, you'll see that, okay, the market did close below. Since, well, the market did close below, you put a stop loss right above and you target the previous low. So that's the most simplest way you can check for entries. So let's go to the chart on the left hand side. We need to see more reactions. We need to see more reactions. So I'm going to show you why it's very important to wait for a reaction. So if you're waiting for a reaction, let's say now the market is pushing like this. We do see that this is a resistance level. We do have rejection here. Now the market is approaching and you see there's another candle like this one. This candle right here. If a candle appears to be penetrating within this resistance level, do not take an entry, because if it's still penetrating and closing above, if you check here, you do see that this candle, this one candle appeared below. This candle did close below, right? But we do have a candle that closed below. We do have a candle that just appeared and closed above. I just meant to say it closed above. So imagine if you are selling even before the market touches this level, you can't be selling because of this one candle that just closed below. You need to get a reaction that the market is reacting below, is rejecting. Because a candle can close below like this and keep the same momentum going up. So if the candle is approaching there and closing without a falling reaction or any sort of retracement reaction, you do not take that entry. We have to see a candle like this one. If you go to the left hand side, we have to see a candle closing like this one. You see this one reacted and closed with an opposite direction. So if you're not getting an opposite direction, you don't have to execute if you're not seeing an opposite direction. So because if the market pushes above, it can easily continue buying. And if you take an early entry, let's say you take an early entry right here without waiting for that confirmation, you will find yourself hoping that the market will reject again. So guys, this is just a simple way you can analyze, and you can go through TradingView, guys. Remember that TradingView is a platform that has more tools, and you can analyze as many times as you can with a bigger screen and a bigger platform where there's many tools that you can use. So let's look into this reaction. Let's see how the market performed here. So when you see the market approaching support like this and closing above support, right? You see here it gave us a close above support. This is where you wait for a candle that's going to appear. If it's going to give you a candle like a buying candle like this one, this is where, or a bullish candle like this one, this is a bearish candle. And if you're looking to take an entry, wait for the bullish candle to appear. It's either on a 5-minute or 15-minute time frame. Same applies here. You see that the market was selling and it closed above, but do not take a buy just yet. Wait for a bullish candle to appear. That bullish candle is very, very important. If the market is not closing above like this, you must know that it can possibly close below. And if you don't wait for the bullish candle to complete, you might just take an early entry. So how do you avoid taking early entries? Rather wait for the candle, this bullish candle, to complete, and then wait 15 more minutes or 5 more minutes for another candle to complete, because it can happen, it can be bullish like this and it can reject. So wait for the candle to close above again. So if you see a bullish candle closing above, wait to see how the market is going to react again. If it's giving you another candle that you waited for and you see it closing above, this is where you can take an entry. So whenever you see a bullish candle closing above, do not take an entry just yet. Wait for another candle. That would give you more confirmation and more confidence when you're taking an entry. So guys, this is a short video on market structure, on entry confirmations. I just wanted to give out this video so that if you're struggling with entries, guys, remember that waiting for confirmation or waiting for the reaction of the market, it is what makes you a different trader. Because most of us, we take early entries and we find ourselves closing with negatives only because we didn't give the market enough time to react. So thank you very much, guys, for tuning into the market structure and waiting for confirmation video. I'll be looking into different types of methods that you can use into when it comes to entries. So thank you very much, guys.